but gold, remember, we made new all-time highs in July of last year. And look, again, this move, very impulsive, and we're just sideways consolidating, correcting a little bit lower. And I do think that this silver move is going to help gold take out new all-time highs. Obviously, the thing to stop this would be if we got a dollar spike and the risk-off move. They usually come together. I think there's a good chance we might get that. So we might see both silver and gold, correct a little bit. But my view for both is still long. You have to be looking, at least my view, you have to be looking at buying dips with a long timeline, the horizon. Okay, so now next one I want to show, oil. I really love these inside trend lines. I drew this a long time ago, and look where it came and found resistance. I mean, it might still break, but it's definitely finding some resistance here. And the other thing I want to talk about oil is, we've said this for a while, when oil prices is consistently low, then like this portion here of 2020, COVID, it was horrible. You see US shale producers shut down. They can't go back online straight away. It takes time. So you're looking at oil performing this pretty good move, from okay, I'm going to ignore the lows here because they were, it was just part of this vicious move. But even here from 30 to 50, just a straight line. And, it's still looking pretty strong. But I do think that now, with rig count slowly starting to increase, supply starting to increase, OPEC, they have their meetings. Okay, they're not cutting anything. Sorry, they're not adding production in any significant way. But we're at this point where I think we might see a little bit more difficulty in getting to the higher levels, which is in the 70s. Especially, again, as I said before, if we do see a risk-off move, you can bet that oil is going to suffer, just like it did in March. Currencies, the euro dollar is a tough one. I haven't traded the euro dollar in a long time. I've shown this last week or the week before. We had this huge descending trend line going up from 2008. And we broke that. And that's a very important technical move. And look, we retested it as well. So that was, this is textbook stuff. You break it, you retest it, and then you go. The question now is, where do we go from here? I think the dollar is going to depreciate more. So this should go higher. But as I said from December last year, late last year, I said, look, I think we are ripe for a correction in the dollar. Not everybody, but the positioning is quite one way, and everybody knows that the dollar is just going to be trash. So when that happens, for me, this is the perfect time to try and establish a short-term counter-trend move. So I'm not short euro dollar, but I'm definitely not long. I'm not playing dollar pairs on the on the short side of the dollar. So this is going to be interesting. I'm not sure, I really don't know. You put a gun to my head to trade it. I don't know what to do with the euro dollar at the moment in the short term. Another one I want to show is euro pound, and this is again something I drew weeks ago, and I said late December, when the UK EU agreement was made, I said, look, the removal of the uncertainty for me is a huge thing. Yes, the UK seem to be doing worse than other countries in terms of COVID, how it's being addressed, but just the removal of uncertainty for me was a huge thing. The no-deal Brexit is no longer on the cards, and yes, it's going to be a difficult transition period. A year or two is going to be difficult, but in the end, I think the pound should do okay. And the pound's doing well. And I mean, we had some data, but data doesn't matter anymore. I think what the market's probably looking at is the fact that vaccination is going well in the UK. At least that's my brother and my friends who live there tell me. And yes, lockdown is quite strict there, but if things continue as they are, then you could see a resumption, a return to some kind of normality within the next few months. At least I hope it happens, because this COVID situation has gone way too long now, and it's affecting economies in a big way. And unfortunately, some of the effects are going to be long term.
The good news is the stock market is so much stronger than it was a year ago. So that's the great news, right?
Yeah.
I was I'm talking with a friend of mine yesterday or 2 days ago, who's not a market. He doesn't understand the markets. He's just like, I just don't get it. Like, I don't understand what our economy is. There's so many people that lost their jobs, yet stocks are so strong. And I'm like, it's all perception, because you have like think about your 401k. I mean, you glance at it probably a month. And he's like, yeah. And I'm like, well, imagine if, 1 month, you look at your 401k and you're like, oh my God, I'm down 20%. You're probably going to be less likely to take your trip to purgatory. You're probably going to be less likely to buy the couch you just bought last month, and he's like, yeah, I guess. And I'm like, it's all about keeping financial markets stable and keeping perceptions a certain way, and that's all the Fed does. So anyway.
Yep.
Yeah.
Yep. Absolutely.
So it looks like Steve just got here.
Yeah. Sorry, guys,
Oh.
but today was the first day that they actually opened the high schools.
Well, good
So,
news is your kid is 4.
yeah, but there are two private schools, one next to the other, and when high schools are also open, extra traffic, etc., plus rainy day.
Oh,
And
I thought he was just really
You,
advanced.
you know
yeah,
what,
yeah,
Mike?
he's so smart that at the age of 4.5, he's already in high school. It's amazing.
That's awesome.
Yeah.
No, I'm really glad that you're here because what I wanted to make sure that everybody knew is how this transition was going to happen with our new format.
Mm-hmm. In essence, we're going to display this today and starting tomorrow.
Okay.
Starting tomorrow after the interview is over, which the interview is going to be starting at the bottom of the hour. 15 minutes after the interview theoretically is over, we wanted to give it a little bit of a cushion because, sometimes, the guest might need to take an extra 5 minutes or whatever. So 9:15 a.m. Eastern time, in Eastern time terms, there's going to be like the part 2 phase webinar starting. Our clients, Forex Analytics clients, will be receiving, a reminder email with a link they have to press, as they do with all the other webinars, and they will be able to join, and we will be going through the bias charts and speaking about like extra markets, and also that will also give us, the ability, since somewhat less people are going to be there, to take time to answer their questions.
Yes.
So on and so forth.
And just so you guys know, just so we're all clear, today you guys will be able to listen to the bias chart analysis because we're going through the new format, and then tomorrow you're going to have a separate link and everything else. So, all right. Well, I don't want to take any. I know, Steve, you might have some ideas or things you want to talk about.
In case it hasn't been mentioned again today. I just want to remind people that even light customers have access to all the private webinars for clients. So it's $19. You get, serious value, including all the private webinars.
Awesome. Did you want to? Is there anything that you wanted to go over today before Dale takes over with the?
I'm assuming you've already spoken about silver and its explosive move higher, right?
No, what happened with silver? We haven't spoken. No, we haven't.
Yeah.
Is silver up?
Why don't you give them your quick thoughts for the next couple of minutes before Dale brings on his guest?
I think there is a serious upside potential for silver. We've talked about that multiple times. I seriously think that within the next 1-2 years, we're going to see silver above $50 and comfortably above $50. So I don't care what the trigger is. In this case, people probably front running and speculating that small retail investors are going to raid silver. In my opinion, it's not an easy market to raid. Plus, Stelios and I have talked about it in the past. I do think that gold and silver are markets that are seriously manipulated to stay undervalued because an increasing price of gold, etc., is sending very warning signals and messages. I just want to remind you that even Greenspan, for example, had said himself as the chairman of the FOMC, of the Fed, in essence, that he was very closely paying attention to gold as an inflation indicator. So I'm not sure how easy it is, to create the type of squeeze we saw in some of the small cap markets. I'm pretty sure it isn't. But nevertheless, I think there is serious upside potential left. I mean, if you just look at the channel that we've broken through, back tested, just the 61.8% fib comes at $35, right? Seems to be rather close. I mean, $6, but $6 at the price of 29, percentage-wise, is still a very, very decent move. So I think there is a lot of upside potential. Now, obviously, you've also spoken about the potential breakdown in risk assets. So I'm going to say once again that we seem to have a legitimate breakdown in the price of the S&P and the rest of the markets. 35.90 is the line in the sand for me, having to do with support area. At the same time, I'm closely paying attention to this inverted head and shoulders here in the DXY, which seems to be testing the neckline at the moment. So I think that this week is probably going to be rather important in seeing if we can have these markets unfold. I mean, these initial market moves unfold to something much more serious and much bigger. I think there's a decent chance. Who do we have today, Dale?
Nargis is with us.
Nargis. Okay, perfect. So we speak again after the webinar.
Okay.
Sorry, after the interview.
Okay.
Yeah.
It's new for everyone. Okay,
Yeah,
so thank you, Steve, Blake, Stell, Nargis. I'm going to get you set up now.
Yeah, just a reminder for those that didn't understand. Today and just today, you stay on the webinar and we continue after this. Starting tomorrow, you're going to have to connect to another webinar after the interview.
Oh, okay.
Okay.
And our friend Bob said part 2 should be called Fame webinar, Forex Analytics members experience. Now that's good.
I like it
that,
actually.
Bob.
You know
I like
something? You know something? We're gonna do it. Consider it done.
I like that. I like that.
Okay. Consider it done. It's gonna be Fame.
Okay, I just made Nargis panelist and I don't see her.
I do see her, Dale.
Is she in the panelist section?
Yeah, she is. I'm also asking her to unmute as we speak.
Okay, because
She
I
is.
guess. Hi, Nargis.
Good morning. Good morning, everyone.
Thank you
and
so
Happy
much.
New Year to everyone.
And thank you for coming in to our new schedule half an hour earlier, Nargis.
Yeah.
Appreciate it. I know you're on the left coast, so you and I are we're like farmers or owls. we get up before the sun does. So if you share your screen, I'm looking forward to looking at some of your levels. Last week seemed to be somewhat significant in risk. That green box says share.
Google. No, I'm trying to do that. I'm just thinking which screen is that. What do you see?
It's gonna highlight the screens for you. Once you click the share screen, you can choose, and if you want, you also have the option, instead of sharing a screen, to share a specific application. So for example, you can just choose to share a Chrome browser, and then it's going to only show your Chrome browser.
Yeah. Do you see something?
No,
what do you see?
Not yet.
Oh,
because you need to.
It says you are sharing screen. You are screen sharing.
No, you're not yet.
So.
Nargis, Motorola has started screen sharing. Double click to enter full.
This one?
Yeah, but it's blank. Why don't you stop sharing and try it once again then,
okay.
Nargis? Okay, and do it once again.
You need to shave your photos, Steve.
There you go. Now we can see you, Nargis. Perfect.
Okay. Get a razor out on that photo. All right, Nargis. We got you. We got you.
Okay, good. Cool. So, so good morning, everyone. And again, very, very excited to be here again with the team, Dale and everyone else. Happy New Year, everyone.
Happy
and
New
thanks
Year.
for, following and Oh, come on.
You're an excellent, hardworking technician, Nargis. We always appreciate you sharing
Thank
your
you.
work here in FACE. So
Yeah. So remember, this was the megaphone we have talked last time.
yeah.
Right. It was here somewhere in late to 2020 when we talked last, and I was looking somewhere around 38.45, the half target, right?
Yes.
Here. So I had marked that, and we got
Nice.
this. Yeah.
Yeah.
So
Yeah.
we got this 38.45 full, little bit excess, and of course I was looking for 39.07 as the excess, and also to hint whether we would get the full cycle of 4489. That is still in
Okay.
the cards as
All
long
right.
as we are above 32.49, because this from this low, this was where it had completed one cycle, and once it pushed past above it, that 44.89 was open,
Okay.
and that is still open, and we are here 50% now.
Okay.
So now this
So are
50%,
the numbers, will the numbers be viable? Say, for example, like this is the way you have the megaphone, a throw over. If
yeah,
it got back inside the
side,
megaphone,
yes,
would that make you cautious?
yes, it will make me cautious to just get a deeper pullback.
Okay.
And as long as we are here, so so these are the areas I had marked to see where we can go in terms of the initial pullback, so till here I think we did get till here 36.50 last night, right?
Okay.
um
All right. So it held the megaphone last night. That candle's
yeah,
not
yeah,
complete. Okay.
yes, so this is XPX, so during the day we will know, but
Oh, yes. Okay.
yeah, right. So
Yeah.
here, so this it almost touched something similar. They're a little bit different, but almost, because ES goes overnight Globex, so the
Oh,
candles are a little bit different, but almost similar. So it did held that level I was looking for, 36 48.50, and we are back above the mean right now. And the level I was looking for it to go back up was 37.21, to say that yes, it has some interest to go and backtest from the downside. So
so
currently
you think we could rally back to 37.20, which is that what we're doing?
37.20, we are currently above that, yes,
Yeah.
definitely. And
Okay.
37.52 is again my level. Above that we can say, yeah, safely it wants to, but right now it rejected right there, 37.52. What was the high? 50, no, today 51.25, so almost 52.
So coming into today, what do you think? You just watch it for lower levels, or is it a buy here? What are you thinking?
So I did go long
Okay.
for this, and then I'm looking for some rejection or acceptance here, else I will exit my longs. And I'm definitely looking for that retest of the I'm definitely looking for this retest of the low to come down from here to some extension here. It got pulled up here, so I'm looking
Okay.
for it to come down here, some extension,
Yeah.
and then if this holds, then I think this ABC will take it further up.
Okay. So
Yeah,
potential ABC from here, from last
from
night's low.
yes. So
Okay,
it's
got it.
possible we may get it today. It's possible we may get tomorrow, because if today is up, then possibly tomorrow may be down. And we have Amazon and Google earnings tomorrow. So
Okay.
let's see where
So
whether
let me ask you this. I mean, you use so many tools, and most of your stuff that I remember is like your targets are. I'm not sure how you come up with them, but you also use Elliott. What do you think you depend on most? What's your edge, Nargis,
I
in the market? What's your edge?
Dale, I don't do Elliott.
Oh, I thought you
No,
just said ABC.
no, I don't do Elliott. It's a
Okay,
very
you do
simple,
GAN.
yes,
Yeah.
yes.
Okay.
So those GAN levels and price cycles from low to high. So this is
Okay.
Yeah. So
Well, you
this was,
confused me when you said ABC, so I thought you were using
yes,
the
ABC, regular Fibonacci, and
Yeah.
Maybe some Elliott, but not that complicated Elliott where way within a way within a way where
Yeah,
you
I'm dangerous when I
yeah. So
yeah.
I get lost. So for
Okay.
me it's very simple where it is with respect to 55 EMA. That's it.
Okay.
So that's my simple wave.
All right.
Nothing more.
So
Yeah.
long
So
from here, but looking for new highs.
it's possible. It's possible because if it wants to go to 44.89, it can overthrow here, and
Yeah.
then
Yeah.
it's possible that I don't know. I was again looking at this March from 2009.
Mm-hmm.
This is month, right?
Yeah. Okay.
So yeah. So
Yeah.
from here to this March, this is. So I wanted to see what it does here. Where we are trading at around here. Let's say.
Okay. So this is some type of GAN site, important month, February, right?
Yeah,
Based upon
I had just
2008,
2009
9.
low.
Yeah.
So this was
Okay.
the clean low, and then this area. Last time we got tested this area here,
Yeah.
and this area is still open unless we consider this small one here. So not sure if we'll ever come here, but who knows.
Yeah.
So depending on where we are here, like, we just chop around this numbers 38.45 plus minus couple of hundred here, there, here and there.
Yeah.
But if this goes up around March or post March, somewhere around the timing, I'm not so very good, haven't gotten so very good at timing, but I'm just considering this as my main guideline and my numbers. If it is somewhere around 44.89, the full 100% price cycle, and the time also matches, I would be really cautious there.
Okay.
That's all I'm looking for myself right now.
Okay, that's an important narrative there. So
Yeah.
perhaps one more hurrah into the spring, and then you see
Yeah.
some the potential of a bear market going forward after that. Okay.
Yes.
And
So
Forex Gal is saying she loves your charts, your Ichimoku Moku. Excellent. So
thank you.
you have fans everywhere, Nargis. So
Thank you. I really appreciate it, actually. So yeah, and I would be very interested to say that this monthly has never traded below. I mean, it did, but for a very short time in a very, very initial run. So if it is really a bear market, meaning the market has trained us to buy the dip every single time, no matter how severe the pull down is, 200 points in a day, 3% in a day, we are trained to buy it.
Right.
Now, interesting part would be, do we go like this deep now down?
Yeah.
So that would that makes me fear that what if the euphoria going on in the market with all the traders going in and rushing, and
Yeah, what do you think about these chat rooms and what happened with GameStop?
Surprising,
Yeah.
Dale, I got to hear about this GameStop and the WSB very late when some people asked me about it.
Okay.
But luckily AMC was still under $3 at that time. But I still had not heard about WSB at that time. So I'm a horse with blinders.
So, all right. Yeah. Now there's some manifesto going around to come into silver to break the back of all the manipulation that's been happening in precious metals over the last 20 years.
So SI, I don't know whether these people have to do anything about it or not, but I was watching this setup here above, so it did cross here and it's nicely up. Now, if it can stay like that above 30 or so, 50%, then it has some good retest above, like, 41, 50 or
okay.
or
So
who
you have
knows?
50% at what, 30.73?
30,
and I think,
yeah. Give a little bit. If my coordinates are 100% at matching, then 30.73 one,
And we didn't get there. I think the high was
high was 30, 50, 35, 30, 35, almost
okay.
there.
Yeah. So we took out the prior high by about 30, 40 cents. Okay.
Cents. Yeah. So once
Any
it gets above,
possibility that what would make you bearish if,
for
say, it might be easier to squeeze individual issues than a big commodity market. I mean, they're having
yes,
success.
yeah. See, GameStop and all, it may be easy to squeeze, but I'm not sure how easy it would be to squeeze silver, because it's not just one, thing. It has a international repercussion. It's a metal. It's maybe you can put the jargons better, but economies and all that are tied into all of that. So how easy and fast it can get, that I don't know. But
Yeah, I don't know. I think it's going to be a little different, challenging shorts and individual issues than challenging, say, for example, JP Morgan. If they want to put a lid on it, they have such huge stockpiles of silver that it would cost them nothing to sell it on paper because they have the physical to back it. It would just lock in a price.
yeah,
So
definitely they'll. I mean, if you have that much power and that much money, yeah, possibly you can do that. You know what, these days when I'm seeing things out so much, recently I saw a series. It's called Scam 1992. I don't know if you heard about it. Harshad Mehta in the early 90s.
Was that like Ivan Boesky?
Yeah, something like that. He was a guy who came up and he kind of worked around the loopholes, how to squeeze stocks, and then every retailer was rushing, so he became a hero. About people would just follow him. Like today, what the some of the few guys says, oh, this person is saying, let us all go buy that, and then later on that stock shoots up, and there's some internal manipulation going on. And then so every single day whenever I'm seeing this, oh, this is that the image of that guy, or that the series which I want, keep coming to my head, and thinking maybe those kind of guys were once in a while, earlier, even here too, or somewhere else, but maybe these days they're everywhere on the street. Who knows?
It's definitely the last time I saw things like this was really in 2000. When we had the .com bubble.
Yeah.
But it's interesting that retail traders coming together could have this much power. So I mean, this is a social media phenomena more than a market phenomena, don't you think? And
yes, definitely times are changing, or they have already started to change, and we are seeing the effects now. And one of the things, while I was studying, not studying, I mean, I haven't finished yet, but I'm still in the process. But the thing is that times ago, I was talking to a couple of my traders who do this work as well, and the idea was that in coming times, we'll see the power shift, uh, in order to put it very simply, and to see an uprising kind of a thing, or a lot of chaos in order to change the order. And we are seeing something like that, right? Since last year, so much is going on. People are on the streets. Some or the other issue is going on. Now it has come to the stock market as well. So you see those big booming events coming out where it's screaming for a change.
Yeah. Even in Russia, they're out there.
Yeah. Worldwide.
Yeah.
India, you take India, Europe, you take any country you take, there is some kind of this commotion going on where some form of change. I mean, things are being trying to be controlled so hard, because now what's the new way you want to instill fear among people, right? Earlier it was easy because there was just a newspaper and you could control. Now it's social media. You and I can report the news live, real time. So how can you use social media against the same things? And then so it's a fight between being free and not keeping free.
And the other upside is that most governments and nations are going to be too busy quelling unrest within their country to be adventurous and go out and start a war, because they have to pay attention to what's happening within their borders.
Yes, the
Yeah, I
chaos
think
is
that's the
within.
one trade-off, civil unrest, but at least not world war or global wars, because governments have their hands full with their own people.
Yeah.
So I have a request from Forex Gal. Do you have anything on the Dixie we could take a look at?
Yes.
I see it right there.
So
So
I had this thread, and I was.
oh yeah, I saw that yesterday. You
Yeah.
were asking
So
Ben and me what we thought. So
yes.
yeah,
So this was the last update I had made. So this again
yeah,
somewhere to 618, and it got thrown off, kind of
yeah,
an double top pattern, and
yeah,
we were here somewhere. Where is it today? Dixie 9083.
yeah.
Somewhere
It's
still
up.
here.
Yeah,
So it has been holding this area, this line here.
yeah,
Now, does it go up here
yeah.
somewhere to
That's what
test
I was
here?
thinking.
Yeah,
Yeah,
or
that's
come down here and then
coin
bounce.
toss.
Yeah, yeah.
Coin
So
toss.
yes, definitely a coin toss. So this is what gives me that ES may still want to hit that upper level again.
Okay. You mean like the breakdown of the green trend
Yeah.
line?
So this
Okay.
may come down some more if ES wants to still cover that upper target. So this may hit somewhere here. ES may get done by that time there, and then both of them can reverse. One scenario, which looks more feasible right now.
Okay.
So
And any other instrument you want to share with us today?
yes, definitely. One of the things which I had mentioned is maybe I could, the newer traders could see is, one of the things which I had mentioned here is, where is that chart? Thread MD distance. Why doesn't it pull the chart? Anyways, doesn't matter. So ES, Dale, this can help just to get some insight into folks who are generally looking into the euphoria of the markets. Is see on a bigger trend monthly, which I follow, is this is a healthy trend where it's generally hugging the 10-day line.
Right.
And here it gets above. So this was approximately 200 points. This was approximately 200 points. This was approximately 200 points before it starts that, okay, this distance is too much, and it wants to come down. Yeah.
And
so now it was 400 points.
Yeah. So even more extreme.
Even more extreme. So that's why I had been putting out that we are reaching this level and this is extremely overbought. Be a little bit cautious. In our room, right around 38.45 or this somewhere, this area, we took shots and took long wicks and UVXY and everything, went short here. And IWM and everything, IWM, SPY, XPX, WIX, everything. So this
is 3,400 a possibility to come back to your grouping of moving average? Because I kind of have something between 34 and 33 for a correction.
Yes. 34 currently 10 days now, 34, 33. So 34, 52, 50, 49, no, 32, 49, sorry. 32, 49 to 33, 65. Those will be the next level. If it wants to target below whatever, this, if it wants to get below this, then we are definitely looking minimum here, 30, at least 10-day, or then coming down. So yes, you are right. 34.49 to 33.65. We are definitely looking. I think I had.
I'm thinking we do that, Nargis, and then we go to your upper level total targets up at 44.89.
100% possible deal.
Just a guess, That's what I do for a living, guess, and talk to other professional guessers like you. You're even a more accurate guesser than me. So
no, Dale, you have seen many moons than me. So definitely experience cannot, nothing can top the experience. Believe me.
Okay.
And that is one thing which everyone needs to understand, especially the people who are getting into this game, that experience always talks, because you have watched enough candles, enough charts, enough times to know and get the feel of what it's going to do, right?
Okay. Yeah.
So
And with the synapses that still work in my brain, I can recognize things.
yeah.
So yeah. So what else? You have something else you wanted to
Yeah,
show?
yes.
Crude.
Crude, yeah, crude is pretty simple. I was looking for
Weren't you
53.
impressed with how it held up when the risk off was coming in last week? It didn't give a budge an inch.
Yes, yeah. So I was looking for 53. It did hit 53, and now it's looking somewhere here.
Yeah.
Yeah, it hasn't done anything beyond that. So possibly
Okay.
here to here or here to here, something like that it will do. So this is the deciding point right now. Not doing anything. Apple, I had, let's go here. So we were looking at NQ, right? YM, I had said that, you know, it will reach here, and it did, and it completed its 40 cycles. And if it wants to reset the cycle, it should take out this number. It did. So anytime in future, these higher numbers are valid now. Okay, it all depends
Okay.
on how it wants to do. Come down first, then go up a little bit, you know, dance around that
Yeah.
staircase. So that can happen. NQ has just now completed this one big cycle right now around here. So that's why we see the tech just, you know, hovering around and not doing much. But it
Okay.
still has the higher target as well. But the stall right now is because we, you know, I did see it hitting it hit 599. So, you know, a little bit excess than this number, but it's going to do that. And last time we had talked about some targets. Netflix is still there as long as, so Netflix did fire its higher cycle. I had a target of 729 that is still intact, provided it still stays above these numbers. Apple hit 145 exactly.
Okay.
Yes, I'm still looking for 169 for that.
Okay.
That's where it will it would complete a cycle. But
That kind
again,
of jives with what you're looking for, this pullback and then one more high
yes,
into the spring.
yeah,
Yeah.
that's,
Okay.
yeah. And Tesla, it just finished a cycle at 901. The high was 940, I think, 940 cents. So almost to the dot.
Mm-hmm.
Now, if it wants to go higher, then it needs to stay above 931.
Okay.
Roku hit its full cycle, and since then it's been down. GME 169 it finished, and 485 was another cycle, and it hit a little bit under 485, and since then it's been dancing around up down, but hasn't crossed. But if crosses here, then I am not endorsing this GameStop or anything. Okay, let me
Yeah.
be a disclaimer here. I'm just
Yeah.
saying, based on price cycle, what numbers we can see. But again, so currently it hit this, and the journey is a little bit downside from here. Above this, we have a bigger number.
Okay.
AMC, it was trading under 3 when we bought in the room. Some people bought it. It was trading above 4. So I had a target for 6 because I did not knew about all this squeezing stuff. And then so I had a target of 6 to just double it. But then, you know, suddenly started squeezing, and we hit the price cycle 21 exactly. I mean, little under 20 something. So that's why it's not doing anything. But if it goes above 21, it will hit 49.
Wow.
Yes. So
Okay.
so from the low of 2, somewhere 2, it did. The ideal number would be 49. Either
50.
50 my number.
times.
Yeah. So yes, so that's the number I'm looking for. Sometime in future,
times.
maybe it will do. Maybe not immediately, but long term, possibly. I mean,
Yeah,
I don't know
maybe
what is
once
long term
we,
these days.
yeah, about 5 hours, and
I know.
probably when we're back in the movie theater having popcorn and watching something. So, Nargis, again, great presentation. I really like your work and your numbers and your humbleness when
Thank you.
presenting them. And thank you for being our initial interview on our new format here in Face. And the best way for people to follow you is on Twitter at Nargis007. Is that correct? That's how you want.
Yes.
So follow the secret agent. Secret agent man. Secret agent man. They're giving her a number and taking away her name. All right. So
Thank
anyway,
you, Dale.
that's Secret Agent Man by Johnny Rivers. And thank you so much, Nargis. Good
Thank
hunting.
you, Dale, for
And we'll
having
have,
me. Actually,
yeah,
yeah.
we'll have you back in the spring when the
Thank you so
flower,
much. And
when the
yeah.
flowers are blooming.
Oh yeah, that would be a nice time. It's raining and windy here in Bay Area, and our fence fell down, so
Oh,
everything got thrown off. Yeah, so yeah.
All right.
Yeah.
Thank you so much, Nargis.
Thank you,
Okay.
and everyone have a great day. Be
Yeah.
safe.
All right. And
Thank
that's a
you.
wrap,
Enjoy.
everyone.
No,
Yeah. Oh,
no
hi.
wrap.
Oh, no
Dale.
wrap.
No
Yeah,
wrap. No wrap.
no wrap. All right.
Yeah.
So
Okay, so
I'll see everyone tomorrow. I think you guys are going to you taking a 15-minute break or just
No,
going right
no
to
need
it?
today. I mean,
Oh, okay.
yeah, so the way it would normally work, and
Oh.
and thanks Nargis for your presentation. But normally how it would work, and let me correct me if I'm wrong, Steve. We would turn it off here, and then at at 9:15, the next webinar would start for the.
yeah, actually, the next webinar would start immediately as a as an open room, as we always do. I mean, we open the webinars, a little bit earlier, but
Right.
we will start speaking at past 15. Yes.
Okay. All right. Very good. But we're going to go ahead and start now and get started with the bias chart. So, but just so you guys understand how the new format is working. So at this point in time, we would be off, and then everybody who is a Forex Analytics subscriber, and remember, you could be a light subscriber. It's the light's only, was it $19 a month? And make sure you download the app and all that stuff too. But you can access all of our webinars that we do specifically for Forex Analytics clients, or obviously for those people that are premium subscribers will be there too. Steve, I want to ask one thing. You'll notice where it says you can join up here in the app or on the website. Is that link gonna be working for the the
Yes,
face or the
will.
chart analysis?
It will.
Okay, great. So guys, you can access the webinar right here if you're logged into Forex Analytics.
They will also be receiving their usual email. So they will be receiving, in essence, two email reminders, one for the first part of phase and one for the second part of phase.
Got it. Okay. And so guys, just want to just want to reiterate that, because I know a lot of you that are in the chat rooms, you tune in directly through the website, and so this is where you do it, and you're going to still be able to do that as well. Okay. Great. Well, I'm going to go ahead and get started with the bias chart analysis, unless you got anything else, Steve, you want to talk about?
No, mate.
Okay. Well, let's start off with the euro, and we're going to work through these really fast. And let me see here. And I need to pull up. Oh, geez. Where is my? I see the Q&A.
Secret agent man.
Are you still singing, Dale?
Agent man. They're giving
I'm looking
me.
For.
Yeah. Do you remember that, Johnny Rivers?
Yes, of course.
You were in kindergarten.
I was young, but yeah, of course.
You probably wanted to be a secret agent, man.
I always wanted to be a secret agent.
I always wanted a shoe phone, like from Get Smart. Remember that?
I was looking for the
bias chart.
No. I was looking for the Q&A, not the Q&A. The
the chat.
Yeah, but I can't find it for some reason. Oh, there it is.
Hit participants.
Yeah, I got it. Okay.
All right.
All right. So just you know, Steve or you know, obviously anybody who's here right now, if you guys see some questions come in that I didn't capture, to just let me know. So as far as the euro goes, we're in a bearish wedge. Now, the reason why we're in a bearish wedge, obviously, is we've got this key support that comes in at 120. It's 120.60, but I'm going to actually highlight 120.50 because I think you got to give it that extra thing. But the euro's trading really heavy, and that's the one thing that we have to realize is the euro's heavy, the dollar is extremely strong. If you haven't seen the dollar Swiss, it's got an inverted head and shoulder pattern. We put in a pattern in play today. Greg has already been in that. I'm trying to buy dips down to the 89.35 level personally, but yeah, Greg has been on it already. It's the dollar looks ready to, you know, move higher, in my opinion. But that doesn't mean that the euro can't. Intraday, it doesn't mean that we can't get back up towards the 78% retracement, which is going to be 121.40. And I think that's going to be key resistance should we get up there today. 21.40. Somebody in the chat room's like, hey, I don't know if the euro is going to give me a chance to sell it again. And I'm like, yeah, I don't know. And it's trading heavy because if we break through 120.50, then keep in mind we have this long-term trend line coming into play. And let me redraw this really quick because I think it's important that I get rid of this arrow. Let's remove that.
Would that measure 117, Blake, on a breakdown?
What's that?
118, the euro.
What? Oh, like a move lower?
Well, if it broke down, yeah.
Yeah, I mean, look, the Swissy actually points to 91 cents. And the Swissy is going to underperform. So, in my opinion, the euro could be quite aggressive. I mean, we could probably see 118 again.
All right.
I know Steve was saying 119. I mean, 119 is just the 24% retracement. 38% retracement is 117. I think it's entirely possible. And again, it really has more to do with how. If we get an aggressive equity market sell-off, that's where it really translates, in my opinion. So, but we you know, one step at a time. You know, right now, what we've got to focus on is a break of 20.60. Then this 120 is the breakout point. Then the trend line here is at, you know, I'll say roughly 120 as well. And if we break through that, then we're going to have to start talking about how deep this correction could be. And in my opinion, it could be fairly deep because remember, and let me reiterate this, guys. I have to reiterate this. This is the most shorted position in the currency market is the dollar. Don't forget that. It's, you know, everybody is short the dollar. Everybody. You want to upend the FX market, reverse that. You know, that's bottom line. So, all right, let's go over to the cable. So here's the sterling. We're at the ascending wedge support. And I'm going to tell you guys, a break below 136. I know we've talked a lot about that. Aussie's crap in the bed right now. 136, a break below that is going to be ugly. And obviously 137.55 continues to be resistance. That's a 78% retracement. Okay. And we're borderline going to turn bearish here. We're borderline going to turn bearish on the euro too. Aussie, I told you guys, it gets below 76 cents. We're going to start looking at a much deeper retracement towards, you know, the mid 70s. So 76 cents is really important. Notice how we failed today too. The rally to 76.60 overnight, even with S&Ps reversing and being up 0.8%, the Aussie's trading heavy. That's got to tell you something, right? 76 cents is support. And then the overnight high was 76.60, right? 76.65. That's going to be resistance today. Anybody who's long the Aussie overnight that was like, oh yeah, you know, Stocks are recovering. I'm buying Aussies. Anybody who bought the Aussie last night in Asia is like, oh crap, why did I buy that? Why did I buy that? You know what I mean? Yeah, that's, I mean, they're like, wow, I can't believe I'm long the Aussie right now and it's so heavy. Yeah, I mean, look, we're below this channel support. It's just, in my opinion, it's a matter of time before we break down. That's my bias at this moment. Kiwi's in a bearish wedge too, very similar to the euro, and the Kiwi is outperforming the Aussie. That's why the Aussie New Zealand is down at the 38% retracement right now. I'm sorry, 50% retracement. But there's a good chance that the Kiwi can start underperforming. So the Kiwi could, you know, make it down here to 71 cents, and this is critical support for anybody who's a Kiwi bull. That's key support. Dollar MEX is starting to squeeze a little higher. If you're with me earlier today, we picked up dollar MEX at 20.29 in the chat room. So, and some people picked, I'll show you why. Some people picked it up at 20, Craig picked up at 20.27. I had looked at it late. Unfortunately, I was watching a movie last night, Ocean's 12 with my kids. So I didn't get the chance to sit in front of my computer like I normally do on Sunday night. Resistance at 72.25, and frankly, I'd give every dollar in the world to be able to spend more time with my kids. So that's you know, I'm gonna miss trades sometimes because I wasn't looking last night, and it just happens. Dollar Canadian. So the dollar Canadian broke this resistance here, right, last week, and even though we sold off on Friday due to some stronger Canadian data, traders have ADD. They don't even know. I don't even remember what Friday's data was, nor does anybody else. So now the dollar Canadian's back up here. Look, if we break 28.75, then we're going to 29.50. So I'm going to write down both of those levels. Excuse me, 128.75, 129.50. And support is going to be at 127.30. Remember, we're still in range bound for a lot of these currencies, but we are borderline about ready to flip bullish on the Canadian, bearish on the Kiwi, bearish on the Aussie. You know, it's about ready to show straight up dollar strength. And you'll see where we're going when we get to the dollar index. Dollar Swiss, it's bullish, guys. This is bullish. We've been looking at this all for the last 2 weeks. Neckline. So you got to think dips now to 89. I know the neckline's at 25 because you can see all these, you know, spike highs here. I would even let it come down a little bit further if you can get it. 29, maybe, you know, maybe 29.10 or 29.10, 89.10, excuse me. 89.10. This is now flipped to bullish. And that's resistance. But it does project to a move to 91 cents, basically. But if you can get a dip today, that'd be great towards, you know, a dip towards 89 cents. And just to be on the long side, if you can buy a dip, that's great if it happens. Just remember, we do have two levels of resistance here. 89, actually, I should write that down, 89.80 and then 90. Okay. US dollar, Norwegian krona. I know I covered this earlier on the when we were on the earlier face webinar because I am focused on this one. Just remember, we have a previous support right here. Trendline resistance is moving lower every day. On Thursday or Friday of last week, we hit 871, which was the trend line. Today, that trend line comes in at 866. So 866, we break that. We have 872. That will flip to bullish if we break above that on the US dollar, Norwegian krona. Dips should be very well supported In the US dollar Norwegian krona down to 850. You can see this spike low. These spike lows right here should all offer support. And you can see that little false break down there. This little false break. That's what should open up the upside. False breakdown usually leads to breakout. So just always remember that. Usually, I mean, not always, but usually. So 850 should offer support if we get back down there again. Dollar mex. So the reason I think you know, a lot of people were looking at the dollar Mexican peso down here is the 618 of this last leg higher. I picked it up a little late at 2029, but I think that 2027 should offer support, resistance. Yeah, I mean, if we break this, we break the overnight highs, then we have this 2075. That's going to be really big resistance. Support will be 27, or actually 25. I'm sorry. I think 25 is the overnight low. Let me double check that really quick. Overnight low 26.65. So it's actually 27. So that's minor support, but this is really key resistance. We break through that and we will flip to bullish, right? Because then, you know, you're talking a big squeeze here. And I know I mentioned this during the week ahead video, but you know, if equities start getting bearish, this is the one that's been built a big base of support. The risk is that we start moving back towards the mid 20s. Okay. Dollar yen. Dollar yen's, I mean, I have a hard time playing dollar yen during risk off, but if you remember, the dollar yen spiked higher during the initial COVID lockdown, and then it came down. I think at some point the yen will gain some strength. That's why I'm not overly convinced here that I should be buying the dollar yen. But look, that doesn't mean, just because I don't believe it doesn't mean it can't happen. And that's you know, the guys in my office that I trade with, they're extremely bearish yen. They think that the dollar yen's, you know, they've been bearish yen for the last, you know, couple of weeks, and they think the dollar yen's going a lot higher. I still have a hard time getting my head around it. So, you know, and when I can't make sense of a move, I tend to miss it, obviously, because I don't if I can't figure it out in my own head, I have a very, very difficult time trading it. But I look at a lot of things. I look at GameStop, and I understand that GameStop is going higher, and I understand the reasons why it was going higher, but there's no way that I would have traded it long. I didn't. And I know positioning is everything. It really is. But you know, I also feel that GameStop is a business that will eventually go out of business. So, you know, it's hard for me to reconcile that. And I guess maybe that's my own issue. So support for the dollar yen will be dips back down towards 104.40, the breakout point here. And we have to flip this to bullish. Excuse me. Resistance will be 105.40, which is the 38% retracement. So even though I have a hard time being, you know, getting my head wrapped around the dollar or yen being on the long side of it, that sure doesn't mean that I want to be shorted either, right? The DXY. So here's the dollar index. And as you guys know, we have a nice inverted head and shoulder pattern here. And I know we've talked a lot about that over the last couple of weeks. Looks very similar to the Swissy. The fact of the matter is if we break 91, which remember we've been marking that up as resistance for a while, we should, it should break out. I mean, if you look at where the dollar index could go, the dollar index could squeeze all the way up to 92.50 and not really change anything. It's not going to change the bearish trend. But if you think about what type of havoc that would wreak in the FX market, so 91 cents is going to be resistance. And I know it's probably like 90, but that doesn't matter. I would just use the round number. Because you got 90 right here, 90.95. Just give it the round number. Let it clear 91 cents on a solid basis. Dips now should be pretty well supported down to 90.40. And let's take a quick look at gold. Gold, I'm assuming, will follow silver too. But silver's doing its own thing right now, and Dale pointed it out. Silver's been underperforming gold, and so maybe this is the time where you see silver really outperforming gold. So gold resistance, let's not look at that spike high. Let's look at the 50% retracement that comes in at 1881. So we'll just mark up 1880. But I think that gold should break higher. I mean, that would be my inclination, is silver is going to eventually drag gold higher, maybe by its pigtails, but it will. 1830 is being support for now, but there's a lot of focus on silver. And if silver reversed, I think gold would be one that would get hit really hard, because how many people are picking up gold right now thinking, oh, silver's moving, I got to buy some gold too. So there's a lot of, Me Too money buying gold at this point. Hold on, quick. Where am I at? Okay, so that was gold, and let's go to the S&P. So the S&P, and then Amir asked about platinum. So I'm going to look at platinum. So the S&P here. This is if you use Forex Analytics, you already know this, because it was sent out in the basic technical analysis this morning with right here. This chart was already sent out. So I'm really focused on the 50% retracement and the 200 period moving average, because you can see the 200 period moving average held as really key support. And then now that we've broken through it, you can see a rally up to it, right up to the 50% retracement, should offer resistance now. So that is at 37.65 or 37.67 rather. And we are going to not go bearish yet, but if we close below this channel support, now you might be looking at this channel going, well, Blake, it's already a false breakdown. We broke it last night and then we came back up again. There's a lot of time left in today. There is. I'm really not going to be too convinced about S&P downside until we close below 3,700. But if we do close below 3,700, I'm going to have to flip to bearish. So near term, and I think, as Dale pointed out, there was only two drives there. Third drive take us down to maybe 3,600, and 3,600 is the big breakout point. And so what Dale was thinking, just in case you missed it, was, I'll just draw it out for you. 1, 2, and possibly a third drive would take us down towards the 3,600. If Dale, if you're listening,
I'm here, buddy.
Is that what you were thinking, right, from earlier this morning?
Yeah, that there could be one more drive down. Yeah.
Yeah, you said there's we've got two drives. We're missing a third. So yeah, that third drive could be the what takes us down to 3,600. I think 3,600 is going to be really key. I think 3,600 is going to be the make it or break it line in the sand for the market.
Yeah.
That's what
concur, bro.
What's that?
Concur.
Yeah. So anyway, here is your bias chart, everybody. So you got it there. And I know that everybody's listening in this morning, not just Forex Analytics subscribers, but as of tomorrow, we will be doing this just for those of you guys that are part of the Forex analytics community. And remember, you don't have to be a premium listener. You can, or premium subscriber. You could be on the light version and still listen to this bias chart analysis. Just with the light version, you're not going to be in the chat room. You're not going to get the advanced analysis, but you'll get the app and, you know, all of our webinars that we do and the analysis that I do every evening and with the rest of the team too. So, all right. I know Steve and Stelios are here, but I wanted to, Amir asked about platinum, and I don't follow platinum. Maybe Steve has something to say on platinum.
Consolidating its recent gains, I think it's going to explode higher.
Okay, well, there you go. And you know what? I have not looked at it since Amir asked about it last time we looked. And yeah, I mean, you know, when you get a move like this, I'd agree with what Steve just said. When you get a move like this and you're not getting any type of pullback, it's just consolidating. Chances are it is consolidating gains before another move higher. And if silver and gold are moving higher and let's just say they continue higher, people are going to start looking at other precious metals like platinum.
It's not only that, it's platinum has underperformed other precious metals for so many years. I remind you that for the vast majority of history, platinum was a more expensive metal than gold. And during the past decade, it started underperforming and it got literally just demolished. And I've been talking about it for many months now, that I think that it has come the time again that platinum is going to shine once again. So yeah, I think there is.
Ronit said in 2008 it was 2.5 times that of gold, and now it's only 0.6 times gold. So yeah, maybe platinum does, you know, actually make a move. And you know, again, this is not a market I follow too carefully, but I know you guys do. But I'm going to go ahead and sign off. I'm going to let Steve and Stelios take over from here and answer some questions. I'm going to run to, I've got to run to the office. Not going anywhere. I actually got to sign off.
Why don't you walk,
Blake? To trade. But hey, I want to thank you all for listening in, and for those of you that are part of the Forex Analytics family, I want to thank you guys for being part of us and supporting us, and I look forward to doing the bias chart for you tomorrow as a group. So thanks everybody. Steve, Stelios, and Dale, it's all yours.
Hey, Blake.
Hello.
Thanks, guys.
Thanks, Blake.
You guys want to wrap it?
Thank you, Blake.
I don't know if I don't have anything else to say. Maybe Steve has something, but
wrap it. No, we're not going to
wrap
it.
I said. Wrap. I said.
Yeah.
Oh, wrap.
Wrap. Yeah. So, first of all, this is a good opportunity to have a very fast look of some of the other metals and then take questions. So here is nickel. You know, still very well bid, probably consolidating its gains as well. This is platinum I was talking about. What I see here is a flat top triangle. I think we're eventually going to break higher and just explode. Here is palladium that seems to be breaking down, actually. So, you know, don't pay so much attention.
That's weird.
No, it isn't, because don't pay so much attention to this trend line support, because it's, you know, a little bit arbitrary. You know what I mean? We still need price action. I still think we are in a, like, you know, long-term consolidation of the explosive move. So yeah, in the short term, this is a bearish development, but I don't think that, you know, you should expect this to, like, you know, destroy like platinum. Might bring it, you know, next downside objectives, like, you know, a little bit lower than 2000. Here's
the major use for palladium. I know they used to use platinum in catalytic converters. It's now palladium, right?
Yeah, they use palladium as well. It's the dynamics of the market, from what I remember when we were trading it back. What is it now? It's now several years ago, like 4 years ago or whatever. It was all about demand supply, and there was like a real shortage of supply in comparison to where the price was. But you know, I'm not into the very specifics, and I don't really care about it. I mean, for me, the chart tells me more than I want to know. You know what I mean?
Right.
Plus the fact, as we've said before, anything that's tangible, anything that has intrinsic value, and of course, you know, palladium does have intrinsic value, right? It is a commodity that, you know, you can use for things and is being used for things. You know, expect it to appreciate over time, measured in fiat terms, right? So this is something that you have to keep in mind. Now, here is copper as well. Now, copper still consolidating here, hasn't really broken down. There is the potential for this head and shoulders formation. I think that copper will find it impossible to hold here if this is a legitimate breakdown in copper in the S&P. I know that a lot of people are looking at this as a channel, but I think that an equally valid interpretation is that this is a wedge, in which case we have already broken down. You know, you can look at it, you know, in any way you want, but personally, I think that probably we've already done some technical damage here. Speaking of which, the VIX divergence, of course, started playing out as we had said that it would. It was a matter of time for the divergence to play out. And we are now back testing this support resistance area at 30, this time as support. So I mean, just by looking at the VIX here, this looks to me like a consolidation before another leg higher in the VIX, which of course, if that's the case, will mean at least another leg lower in the S&P. And, you know, since the S&P is the barometer for risk globally, you know, it's highly unlikely that the S&P is going to be dumping lower and other indices are going to be like flying high. So, you know, keep that in mind. And I think the VIX is, the VIX in essence is giving me more confidence that perhaps the ascending wedge scenario is the case here in the S&P, and not the false breakdown from a channel type of interpretation.
I have a line around 50 in the VIX, Steve.
Yes, that's the next area of resistance. By the way, keep in mind that having said all that, you know, the risk reward ratio definitely benefits short positions here. That doesn't mean that the trend has been completely invalidated, right? So all I'm saying here, so I don't get you know, misinterpreted, is that from a risk reward perspective, looking for more downside makes 100% sense, because this is not enough of a pullback to say, oh, you know, this is a great buying opportunity. I mean, we worked out the overbought conditions, everything's, you know, we got rid of the excesses, and, you know, the market can finally move higher once again. I mean, yeah, after a move like the one we saw, a correction that in essence consisted only from 2 bearish candlesticks, no, that's far from what is needed for this market to work out its overbought condition. So even if we see that the ascending channel scenario is the correct one, and we keep on moving higher, I will still be expecting in the near future a very sharp and very deep correction before we can once again start looking to buy the dip. And why would I be looking to buy the dip? Of course, not because of fundamental reasons, not because I believe that the economy is healthy, everything is nice and rosy, and we should be buying because, you know, equities are going to depict, you know, the great economic environment that is going to lead to higher profitability. I just believe that since this whole Ponzi scheme is based on keeping elevated asset prices and keeping this wealth effect going, I'm pretty sure that the Fed is once again, once we see like a sharp dip move lower, is going to do whatever is needed, even ending up buying equities per se, to keep the party going, right? That's the only reason. Now let me see what other questions we have and for which markets. Russell taking a run at 2,100, bounced off the 61.8. Let's have a look at the IWM since you mentioned it. So the IWM is also a possible ascending wedge that has broken down, as you see here, right? Now, from purely like a zone perspective, I think that there is, literally there is no real support until we go back to like 190, 191, right? So 1,900 in the Russell. Of course, somebody can say we might stop at the previous high here at like 2010. Yeah, okay, we might. But I do think that this is also overdue. Look at this move. Look at this move, right? From 95 to almost 220. So, is this the type of correction that is needed to take off the pressure for a move like this? Absolutely not. And speaking of which, here's also the Nasdaq. So, line in the sand here in the Nasdaq is this horizontal support resistance area, in my opinion, 12,500 roughly. We go below 12,500. I think there is no real support until we go down back towards 11,200. So I think we break through this support area. We should, just plunge through all of that, perhaps even 10,800. I mean, easily doable as well. So keep that in mind. Look for sugar. Very rarely we had signals where short S&P 500 and long sugar has triggered. Sugar above 16 is bullish. Can you give me the ticker, please, Ronit?
SB, I believe.
SP, you said?
B.
Oh, SB,
like
SB. Sugar futures. Yeah.
Yeah, there it is.
Sugar has a lot more to go, if you're asking me.
Yeah.
But in the long term, right?
Yeah.
For the time being, this looks like a channel, at least eyeballing it. Let's see. Yeah, more or less. Yeah.
Sugar.
I mean,
do.
Yeah, in the short term, it's overdone, right? You can see this.
Yeah.
Now, of course, nobody says that
remember
it
that
can't.
song?
Yeah, of course, absolutely.
All right, bubblegum music. Yeah. Like your favorite ice cream is bubblegum.
True.
I remembered it from our interview.
You really have an elephant's memory. And here's the DAX. So the DAX not really broken down yet. Somebody can make the case that it's working on a bull flag. That's why I said it's not like, slam dunk, that's it. We've seen the high for now. But I think that from a risk reward perspective, more downside, shorting like, any rebound here against the highs probably makes sense. I'm not short yet. So I would have told you, of course, if I was. And not only I'm not short, I mean, I haven't even managed to close half my USD NOK position. And the reason is, once again, the 4-hour chart, right? I mean, I've been monitoring at this rebound. It's so far not impulsive. So, I've been like ready to take profits on half of my short position multiple times, but I don't see anything that really worries me that there is like a big squeeze coming in the case of USD NOK. Not yet. So, I remain a little bit skeptical about all this. I think we might have seen a very interesting turn. I think this week is the week that we're going to find out if that's the case. Somebody's asking about natural gas, by the way. So let's visit both crude and natural gas. So here's crude. Okay, if you want to make an argument about bullishness, crude oil says that doesn't really care. So crude oil testing bull flags, trend line resistance as we speak. Today's candlestick so far very bullish. It's an outside white candle. So as I've said and written many times, it looks likely that crude will just squeeze higher once again before like a deeper correction. Now, having to do with natural gas, just look at this. And thanks for reminding me, by the way. Natural gas seems to be breaking today above this channel trendline resistance. So that is going to be quite a bullish development. We didn't get a lower low. I had said that there is a chance that we can even see one more low, towards either the 61.8 or even lower to test this channel's trend line support. Let's see how we close today, because to be honest, it's early on the day, and by the end of the day, we might pull back and not close above the channel. But I think that that can prove to be a very, very bullish development, because in any case, my bias never changed. I mean, I said multiple times that I expect this move lower in natural gas, no matter in what way it unfolds, to be some type of a corrective move. And unfortunately, corrective moves are very hard to read in advance. I mean, they start looking initially as a triangle, then they might start looking like a flag, then it might become a complex type of correction within a channel like the one you see here. So you need to keep redrawing a correction until you can finally say, okay, now I'm convinced that this corrective move is over. And how can you be convinced? Because of two things. First of all, the more price action evolves, the better idea you get of what the technical formation is. Second of all, you see a clear change in momentum, because corrective moves have a very different momentum than impulsive moves. So look at today's move so far, by the way. It's like a 10% move higher in natural gas, right? So if we end up having a day like that, and this type of momentum like resumes, then you can be more or less sure that, yeah, okay, I mean, it's the difference between the move higher and the move lower is more than clear. So the path of least resistance is higher, and I do think that we're going to see much, much, much higher natural gas prices. I remind you that at some point natural gas was at $6.50, right? And it's currently below 3. So even historically speaking, there is a lot of potential for upside here. Yen pairs bullish should imply risk on, right? Listen, this correlation has really weakened. Why and when did it weaken? It weakened in essence when the treasury market became almost exclusively the job of the Fed after COVID. So it was always hugely influenced, but now it's like, there is more or less one buyer, right? And it's not only happening in the US. I mean, 85% of the bond issuance in Europe last year was absorbed by the ECB. 85%. And in the case of the smaller southern countries, like, for example, my country, Greece, it was 100%, right? 100%. So, since USD yen has traditionally been sensitive to yield differentials, of course, and historically, we've had this extremely strong correlation between yields and risk assets, but this has, somewhat broken down, as I explained. It's not as straightforward to say yes as it would be until some time ago in your question about USD yen, if that in essence implies undeniably a risk on environment. It might not. By the way, where the hell have I placed it? There it is. So here it is. What we can agree on is that we've already seen a bullish breakout, because there are two formations I was paying attention to. One is the blue one you see here, a descending wedge. We broke out above it. And now we're also today attempting to break out from this larger formation. You see the red one, which is a triangle. So yeah, it seems like we are breaking out. I'm not enthusiastic about buying it. And, you know, the answer to why that's the case is just look at the past and not so recent past. But I have to admit that it legitimately looks like it's attempting to break out. In that case, given all that I explained previously, the only thing that would change for me would be my preference in buying or selling currencies against the yen versus the dollar or vice versa. So for example, what I'm trying to say here is the following. If the USD yen is clearly breaking higher and we break through this trend line as well, if I'm looking to buy a currency, let's say I'm looking to buy the Aussie, right? And the USD yen is breaking higher, I will probably choose to do this against the yen instead of doing it against the dollar, right? Or oppositely, if I'm looking to be short a currency, uh, you know, completely just using it as an example, let's say the Aussie again, and the USD yen is breaking higher, I'm going to look to be short the Aussie against the dollar and not against the yen, right? Because if the USD yen is breaking higher, I might be right in my call, let's say that the Aussie is going to move lower, but the yen's weakness might counteract Aussie's weakness. So I might be short the Aussie against the yen and nothing would happen. So I will only be using USD yen like this. I mean, to tell me if I should be short or long something, preferably against the dollar or the yen for the time being. Now, for me to get convinced to actually start trading USD yen itself, I will need to see a lot more days of trending price action to be convinced that this abomination of a market, that it became an abomination of a market, has actually changed its characteristics. And like 3-4 days is not enough. Okay. So that's my position about USD yen. Euro pound. So Euro pound again, holding this horizontal support area. It looks heavy. Admittedly, it looks heavy, but I can't get myself to short it as long as it's testing this area and holding, right? The fact that it's not rebounding despite holding is not a good signal for the bulls. I can tell you that much. But on the other hand, it's still holding. So what I'm trying to say is that this 88.40 area, it's a pivot area. So it's the bull bear line in essence in the short term, right?
Yeah.
I mean, above it, you can be long from a risk reward perspective, makes 100% sense. If we slice through it, you know, I wouldn't be want to be long if we slice through it, because, you know, in essence, there is no support until we go below 87 afterwards, below 87 cents.
Yeah, I have some confluence with an off number and a moving average around 88.90, Steve.
Yeah, I mean, you know, we break through this area. I mean, we open a lot of support levels below, right? Yeah, I'll tell Blake to add silver to the bias chart. No problem, Michael. No disagreement there. What will happen with gold and silver if the real rates start rising? The real rates, they should fall if the real rates start rising. The thing, Dillian, is that I really can't see this happening, mate. I really can't see this happening. Real rates rising. I mean, looking at the fundamental environment, I think real rates, best case scenario, can stabilize somewhere here, if not continue going lower. Nominal rates don't matter. So your question is very right. I mean,
and Steve, one more thing. We've seen decades of price action where real rates are positive and negative, and obviously in the short term they will affect metals to the downside. But in the medium term, if you look at the last 5 decades of price action with positive, negative real rates, doesn't matter. They're going up.
Yes.
But in the short term, yes, they can produce shocks. That's for sure.
Yes, they can indeed. Anyhow, guys, we would have no problem holding it longer. But in 10 minutes, we have the Spanish webinar for Spanish clients starting. So I want to give the ability to Leandro to open the room.
Cerveza, por favor.
Yeah, sorry, I speak no Spanish. Ich spreche ein bisschen Deutsch. No, no Spanish for me. Stelios is actually
he's multi. He could. Stelios could work at the UN.
Yeah. He speaks Spanish, French.
I'm not fluent in Spanish. I'm in French and English, but not Spanish. But anyway, it doesn't matter. Okay.
Wow.
Well, it was
language
good.
Of love.
It was, yeah. It was good. I think, and the new layout is starting properly tomorrow.
Yes.
So thank you, everybody. Thank you, Steve and Dale.
Thank you all.
Thank you, Steve and Steve.
See you all tomorrow.
All right, and go ahead, say the tagline, Stel.
Okay.
Go, Stelios.
Remember, don't count your pips, count your blessings. And thank you, Coach.
All right. Okay, everyone. See you tomorrow. Adios. Phase 2.0 tomorrow.
Fame,
yeah, I saw that. It's a good one.
Fame after phase. I like that.
Yeah. All right. I'd rather be rich than famous, but you know what? All right, buddy.
But at least if you are nothing of the two, it's even worse. So better famous than none of the two, right?
I'm infamous, man. Infamous.
Yeah, infamous indeed.
See you, buddy.
Bye.